Hello there. Welcome to Talking Econance. Today's video is about stress in Indian consumption due to decline in retail disposable income. Request you to please like, comment, and share the video and subscribe to our channel as it is just a few seconds job for you, but it motivates us to create more valuable content on the channel. Also, please press the bell icon to get the latest updates immediately. Let's get started. Over the past couple of years, India has experienced growing stress in domestic consumption, which has traditionally been a key pillar of its economic growth. One of the primary reasons for this stress is the decline in retail disposable income, particularly among lower and middle income households. Persistent inflation, especially in essential goods like food and fuel, has significantly eroded household purchasing power. While headline inflation has moderated at times, core inflation remains sticky, and volatile food prices continue to impact monthly household budgets. Moreover, wage growth has not kept pace with inflation, particularly in the unorganized and rural sectors where the bulk of India's workforce is employed. This situation is compounded by rural distress, driven by erratic weather patterns, rising input costs in agriculture, and subdued returns on farm produce. These challenges have led to a decrease in rural disposable incomes, weakening consumption demand in the heartland, which forms a large portion of India's consumer base. Additionally, high levels of indebtedness and rising EMIs, owing to the Reserve Bank of India's interest rate hikes to combat inflation, have further strained urban disposable incomes. As a result, there has been a noticeable shift in consumer behavior, with households prioritizing essential expenditures and curbing discretionary spending on items like apparel, electronics, and dining out. Even within the fast-moving consumer goods segment, companies are witnessing downtrading trends, where consumers opt for smaller packs or cheaper brands. These indicators collectively reflect stress in India's consumption economy. Recognizing the economic vulnerabilities, the Indian government has introduced a series of fiscal and welfare measures aimed at protecting household incomes and stimulating demand. One of the flagship initiatives has been the PM Garib Kalyan Anna Yojana, which provided free food grains to over 800 million people during and after the pandemic. This not only ensured food security, but also freed up income for other essential expenditures. Programs like PM Kisan, which offer direct cash transfers to small and marginal farmers, have also played a critical role in sustaining rural incomes. The government has increased allocations to Mahatma Gandhi National Rural Employment Guarantee Act, offering a fallback employment option for rural laborers and supplementing household income in times of need. On the inflation front, the government has intervened with cuts in excise duties on petrol and diesel, and increased subsidies for fertilizers and other agricultural inputs to reduce the cost burden on farmers. These efforts are intended to contain cost-push inflation and protect both rural and urban consumers. Additionally, through the production-linked incentive schemes, the government aims to boost manufacturing output and create employment opportunities, particularly in sectors like electronics, textiles, and pharmaceuticals. These structural measures are designed not just for short-term relief, but also to build long-term income-generating capacity in the economy. On the monetary side, the RBI has adopted a calibrated tightening stance to control inflation. Although higher interest rates can suppress consumption in the short term by increasing borrowing costs, they are intended to stabilize prices and restore purchasing power in the longer term. The combination of these fiscal and monetary policy measures reflects a comprehensive approach to addressing the current consumption slowdown. Looking ahead, the outlook for Indian consumption remains cautiously optimistic. In the short to medium term, some recovery in consumption is expected as inflationary pressures ease, and the base effect of previous high inflation comes into play. With the government's continued focus on food security, subsidies, and rural development, rural consumption may gradually recover, especially if agricultural output remains stable. The upcoming festival and wedding seasons could also provide temporary boosts to discretionary spending in sectors such as gold, clothing, consumer durables, and automobiles. However, the recovery is likely to be uneven, with urban consumption rebounding faster than rural consumption. Urban areas are benefiting from a stronger recovery in services, higher formal employment, and digital infrastructure growth. Over the longer term, India's demographic dividend remains a structural advantage. A young population with rising aspirations, coupled with increasing urbanization and digital penetration, will likely support a more robust consumption cycle. Moreover, the expansion of credit availability, financial inclusion, and e-commerce will further integrate more Indians into the formal consumption ecosystem. That said, the sustainability of this outlook hinges on the success of policies aimed at generating employment, improving wage growth, and enhancing agricultural productivity. Investments in infrastructure, education, and skill development will be crucial to increasing household incomes in a meaningful and sustained way. If India can navigate these challenges effectively, the current period of stress may well be a temporary phase in a broader growth story. However, structural reforms and continued policy support remain critical to realizing this potential. Once again, request you to please like, comment, and share the video and subscribe to our channel, as it is just a few seconds job for you, but it motivates us to create more valuable content on the channel. Also, please press the bell icon to get the latest updates immediately.